Welcome to this Thursday, March 27th. And yesterday's debacle day, pullback day, cold water, bucket of cold water on us kind of a day. The whole thing kind of came apart there. But for my little attempt to rally higher. But that is what happens. That's markets for you. So at this point, we kind of backed off this whole little rally we had done here to test that gap. We gapped up from Monday, and let's see how this whole thing develops from there. Now, this morning we have news, a fair amount of news at 8:30. GDP, and that's going to be another read of the fourth quarter. International trade, jobless claims, corporate profit, retail and wholesale inventories all coming out at 8:30. So that could be market moving. At 10 o'clock we get pending home sales, and then at 10:30 we get a nat gas report, and that's about a 7-year auction at 1. So 7-year auction on top of that. So that's kind of the news. The bulk of it coming out at 8:30, and then at 10 o'clock we get a minor number, and then a 7-year auction at 1. But I think the question really right now going into today's trading is this sell-off we had yesterday. They were up here against an upper area of resistance. They were just getting to it. Run out of gas, knocked it down hard. Gap test, we haven't closed the gap. It definitely tested the gap. And so far, it looks like it's holding. So far. So we'll see. If it holds, we can certainly have a good day and then trade right back up again. So we will see how it develops, but I would be looking at weakness to get started, looking for a retest of this gap in the start of the trading day, and then see if they can take it out or not. So if we get another retest of the 40 to down to the 30s and 40s here, and it holds, I think we have a good shot at trading right back up again. If they take it out, we're right back in this lower range again, right back in this debacle range, and we'll see what happens with that. But that's going to be the key determination for today. It's 50 cent. We closed around, the high was 57.20. We gapped up to the 35s, and then we are trading higher from there. So that's going to be the key thing to watch. And here you have the gap, right? There's your gap. They closed at the 20s on Friday. We gapped up, started here at the 40s, and then started trading higher from there. And so now we're right in here. We dipped into it in the overnight at the open, but then again, right in that the down period, they announced and had a press conference about the new car tariffs, and so that was the initial reaction. Came right out of the open when the market reopened, little rotation down there, and then we just kind of backed off again and held on. We've been holding on to that 40 level for now, so I'm going to be modestly optimistic that we can hold this. However, I'm going to be looking for retests to this area, the 40 to 45s, the 30s, even down to the 20s for rotations back up again. So they start taking out that 20s, starts trading below it. I think we are back in that lower range again, and bets are off. We're heading lower again. So initially looking for early weakness, for potential long opportunities against the 40, 45s, the 30s, and that 20 level for rotations back up. And if they start taking out the London high and start trading above it, we may have a shot at retracing this. And they definitely retraced this whole move to the upside in one big swoop to yesterday. So we can certainly head higher. If we get early strength, though, right from the get-go, I would be looking for short setups against the 57.70s, the 85s, up to the 90s. For rotations back down. If they take out the 90s right from the get-go, I think we are right back up again. But just in case we don't get that early weakness right from the get-go, we start seeing some early strength, I would look for potential short opportunities against the 70s, the 85s, and the 90s for rotations back down. And that's just because it's when you get the big down day like this, you can certainly get a little bounce off it, and then you get another attempt to take it lower. So looking for that retest of this 40-45 area in the day session. If that holds, that's when I get more comfortable that we may have a shot at taking this back up again. So on the ES, key question for today, is this gap going to hold? I'm going to be looking for that early weakness to retest that and see if this is going to hold. And below that, 57.20s, bets are off. I'm going to stay on the short side and see how far they want to take it. But looking to buy against the 40, 45s, 30s, and the 20s for rotations back up. All with a little bit of caution, given that we had a pretty good move to the downside. So if there's something behind it, then they can certainly blow through this and trade this lower. Now, selling a day like yesterday, you can see we took our sweet old time trading up, and then you see how the elevator comes down, and it's just an algo trading thing. Once it kicks in, it's like a pile-on effect to the downside, and that's why there's just no relief. They just started hammering this to the downside, and it's very tradable. As you know, yesterday was very tradable if you can get on a trade. You saw me try to get short on the Nasdaq a few times. It's not easy because the range is so big and you get shaken out all the time, but it is very tradable, and you get on a good trade a day like that, then you can make some good coin. But initially looking for that early weakness. Let's see if the gap is going to hold. If we don't get that early weakness, we start seeing strength instead. We start to take this higher. I would be looking for short opportunities against that 57.70s. There could be something right here at the 65s. I didn't want to split this up because it gets just too cluttered. But it could be something already here at the 65s. I left the edge a little bit higher at the 70s, so looking for the 70 edge, 85s up to the 90s for rotations back down, and above 90s, we are back on track heading higher again. So that's how we get started on the ES this morning. Let's see if this gap is going to hold. Looking at our bonds and the bonds of the Nasdaq, and the bonds down again. Look at that big move to the downside on the bonds. That's an interesting dynamic, and we are. If I look at my capital flow in the bond, it looks like we are heading down here to this attractor now at the 114.24. We've been slowly moving this lower. So if I start folding these together, you can see like they're slow. That's a slow move to the downside, but they are moving, heading down here to that 114.24.25 level right now. So I would stay on the short side on the bonds. Let's see if and wait for them to get down here before I start looking for buying opportunities a little bit further down. So starting off, looking to sell strength against the 15.14s, 15.20s, 15.25s for rotations back down. Above the 25s, I'm going to assume we run back to the 16 attractor area. All right, so this is an attractor area, the 116, 1605. Where the 11604 is the mode. In this area is where you have the attractor. So if this starts trading above that 115.25, I'm going to be looking for a move right up there and staying up in that range. But initially looking to sell strength for rotations back down. I'm thinking that they're heading down here to the 120.24 level, and that's kind of where your next attractor is at. So we are right on our way down there. This is a little bit more than a probe below the support area, so I think they're definitely repricing the bonds a bit to the downside. That means yields are coming up a little bit. So still nothing panicky about it, but it's not like a flight to safety kind of a dynamic where everything rotates into bonds in a massive flight to safety. Looking at the Nasdaq though, Nasdaq is also down here. There's a gap on the Nasdaq. They were down here. The Nasdaq that was a brutal day on the Nasdaq, man. This big tech got hammered. You see how that range, nice move to the upside, and then elevator down, boom, and that's just brutal. You know, you get on that thing early on. Initially, yesterday, if you tried a long trade early on, that would have been perfectly fine. It would have been a losing trade. And then you can figure out like, yeah, they're blowing through levels, and I'm gonna try a short trade next. And then you find yourself all the way down to the gap. So that was a pretty brutal day. So far, the overnight is holding the gap. It's 20,040s, 20,000s down to that 19,960s. So they closed at this 960s, and they gapped up to the 20,050s. So looking for early weakness to see if you can retest this gap. And I'm looking for buying opportunities against the 40s, the 20,000s, the 970. And on the Nasdaq, I'd probably include the 930 because Nasdaq is so volatile. So that could certainly be an area to watch. But looking for a retest of this low, maybe lower. But If the support area holds, we are pretty good shape to trade back up again. If it doesn't, we are right back down in that lower range again. And there's some capital flow. You can see this is the gap. We'll be right back in this lower range again. And then, yeah, well, we can certainly head lower at that point. So we'll see if this little pop to the upside was just that a little pop, fake out to the upside, and then we're going to be right down here testing the lows again. It could certainly happen. So we're still, doesn't look like it's still kind of quite made it out of this hold yet. Looks like the bottom may be in, but we'll see if they are going to be able to muster any sort of retracement here. But anyway, I think the first key hurdle is going to be the gap up here. If they take that out, if they can hold the gap, I think they're in good shape potentially for another retracement back to the upper levels and maybe see an attempt to take it higher again. And if they can't, if they take out that gap and start trading lower, then we have bets are off. We are heading lower at that point. If we don't get early weakness, but if we get early strength instead, it starts trading higher, I would be looking for short opportunities against the 120s, the 140s, 200s, up to that level, the 240s, maybe even the 290s here, for rotations back down again. So that would be basically like an initial little bit of strength at pop in the morning just to see how far they can take it, and then they'll nail it in the afternoon. So that's going to be the key dynamic to watch. First, the early weakness to see if they can take out the gap. If that happens and it starts trading higher, we have a decent shot at trading back up again. But it could also be that they take this up again, and then the afternoon weakness or strength is going to be pretty determining if we're going to be seeing some sort of an attempt to take this back up again, or if we're just going to be faltering right back down. So initial start of the day, we're looking for that gap, see if the gap's going to hold up. And then towards the afternoon, we're going to have to figure out, really watch if the market is going to show some strength or weakness, especially a day after today when we had a pretty good sell-off. There could be a morning bounce and then afternoon selling, and that just tells us that, yeah, the bears are back in action again. All right, so that's where we are on the NASDAQ. I'm looking for that retest of the gap, looking for a long trade there for rotations back up. If they take it out, we're staying on the short side. And then finally, oil and gold. Gold popping like crazy. Go figure. So that's typical, right? Suddenly in the middle of everything, you get a massive popping gold there. So they were down here, they're holding right at that 30-35 level. And I moved it higher. It was a little bit lower that edge going into the session, but it's they pretty much blew through that one in the overnight, and then they reverse retested it in the London session and basically took off from there. Now we're up against the 3060, so we're up against that upper area again. On the other side, this is the last trading day on April. Tomorrow we roll to the June expiration for gold. And capital flow, look at that. So we're down here in this area. If I fold us together, this could very well be a start of a move out of the middle to the upside. So we're barely coming to balance. Doesn't quite build a hell of a lot of volume. So we'll see if they start taking this higher. But at this point, they're right up here against this upper edge. Now, initially, I would look for a failure trade to take it out, looking for a short setup up here. But if you start taking this out and you had to watch kind of what's happening, if they start showing some strength here as the session starts, I would stay on the long side and see how far they can take it. So initially, I'm staying on the long side to see if they can retest this high, potentially take it out. If they can't, that short trade may set up, and you may have a nice rotation down, especially retracing these single prints could be a nice short trade from the 60s here all the way down to test the 4950s again. Nice 10-point trade in that. Good setup. So that's a goal. You see that's crazy run up there. And then it's been going sideways since then. So we'll see if this now sets up. So far, I haven't been able to take it higher, but that's worth watching. So if it doesn't happen, the short trade needs to be right up here, up against the edge, and the stop could be pretty tight. So they run you over, then you're out of that trade. And then oil, just kind of sloppy action on oil. That's not going anywhere. It's just kind of holding in a range. tightening up. I may have to stretch this out a little bit because it's getting all crunched up here. So not a lot of range, not a lot of movement. They're pretty much in a holding pattern, and they traded a little bit higher based on the energy tariffs and some concerns in what's happening in the world. That is the risk premium coming back on again. This Gaza situation started blowing up again. We'll see. But if they manage to get the ceasefire in the Ukraine-Russia situation, you start seeing the Middle Eastern calm down. This whole thing is going to definitely start coming down much faster. Right now, they're pricing out. I think a big part of this is pricing out the Venezuelan and the Iranian oil from the picture, because I guess right now they're going after those two sources. So that's the supply which is going to come off the market. Could be the reason why it's trading higher a little bit, but I'm not going to worry about the long side on oil. If anything, I'm looking for short setups on oil going into the short setups on oil, given the structure of the policy change we have in front of us. So the fact that it's trading higher, that sets up a nice short opportunities. There's no reason to be super aggressive, though. I mean, as you can see, there's plenty of opportunities up and down, and so far the market is just trying to find its way in terms of the direction. So far I have not really started blowing out support and start heading lower in a big way. So we'll find out. But I'm kind of staying away from oil. It's not quite moving a whole lot. It's going sideways. But gold could be definitely tradable. That could be a nice trade, especially that short opportunity against the highs. If that resistance there holds, that could be a nice short trade there. But there's no rush to take that trade. Wait for the day session to kick in and see if they're going to try to take this higher first. All right, back to the ES. And as we got started there, both the ES and NASDAQ, key thing, watch this gap right below us. We are retesting the gap right now. And if it holds, we can certainly trade back up again. If they take it out, we're heading lower. I would stay on the short side if that's the case. And let's see how this afternoon develops, because that's going to be the key in if they're going to be able to stage a comeback or not. Alrighty, we'll wrap it there for now. So news in about 8 minutes. Get a bunch of news at 8:30. So good trading, guys. And we'll see you guys back at 11:30 for the next update. Alrighty, guys. Later.